and welcome to our September off-market update. September was a great month for us. We sourced 149 new leads, which led to 77 calls and meetings, 14 offers submitted, one more deal closed, bringing our total for the year to 12 total off-market closings this year so far. And we still have 17 deals under letter of intent that many we hope to close before the end of the year. So momentum continues to build towards a very strong finish to 2025 and already starting to build some of our momentum that will carry over into 2026. As mentioned in September, we helped get another deal across the finish line. This deal was supporting a strategic buyer in the industrial sector, helping them close on a highly technical equipment manufacturer in the Great Lakes region. This acquisition significantly expanded our clients' capabilities, especially in the gearbox rebuilding and engineering space, positioning them to grow their service and repair capabilities and into new markets as well with new clientele. A couple things that made this deal noteworthy: from engaging us to being introduced to this company took only 3 months. That's inclusive of 1 month to get started. So really within 2 months of the active outreach, which is quick and demonstrates that we can get down to business right away, building momentum and sourcing proactively. Also, time to close took just over 90 days, which is pretty good nowadays. We'll talk a little bit more about closing timelines in a minute. And overall, from engaging us to closing on the deal, it took the buyer roughly 9 months. This is squarely within our average. Most of our clients engage us, and from engagement to closing, it takes somewhere between 8 to 10 months. So 9 months is squarely in the middle of that range. We're hopeful that this client will continue acquiring businesses with us. They've indicated a desire to do so once they've digested their current acquisition, and we're proud to have facilitated another acquisition of a legacy manufacturing and industrial related business. Something we're seeing that's indisputable: deals are taking longer to get done. And while there are some pros and cons, there's a lot of pros for our off-market approach when considering that deals are taking longer. So first off, across the market, closing timelines for buy and sell side deals used to average 60 to 90 days. And now often they extend past 90 days, 100 to 120 days, even for motivated and qualified buyers. And now why is that? Number one, quality of earnings. That has become much more standard place even for smaller transactions, and that will add time to the process. It can typically take 3 to 4 weeks to get a quality of earnings completed, provided that information and answers to questions are provided promptly. So definitely can take longer than that if a seller is not forthcoming with information. Secondly, banks just seem to be extra conservative and moving slower than ever, layering on additional reviews, committee steps, and documentation requests. And this is a little bit of a self-fulfilling prophecy, because if things aren't done quick enough, then enough time lapses, and all of a sudden a lot of that bank documentation needs to be refreshed, an updated year-to-date, more questions about the future. It's just taking longer on the bank side. Buyers are being more cautious, especially first-time acquirers that want to confirm every assumption and avoid surprises and are new to this. A lot of new buyers entering the market, so that makes sense. They'd take more time than the more sophisticated and professional buyers. Also, retrades and renegotiations have increased. And this is, again, across the board, from the sophisticated buyers to the first-time buyers. I think especially on the sell side, when you are a buyer going after a marketed deal, a lot of buyers are taking the tact of, let's get the deal under letter of intent and exclusivity, let's take it off the market, and then let's look for any reason to knock the price down later on, a justifiable reason. But certainly once a buyer has you under letter of intent and a lot of time has gone past and you don't want to go back to market, they have more leverage to try to renegotiate at that point, and we're seeing that occur. And lastly, accounting and tax reviews have deepened. There's just more diligence being done on various aspects like net working capital, WIP. Sometimes we have to convert between cash versus accrual. Again, working capital targets can be a contentious negotiation sometimes. At first glance, that sounds like a slowdown and probably sounds like a complete negative, and there are negatives to that. But for a lot of our buy-side clients, there are also positives. As I mentioned, More time under due diligence does equal more leverage for our buyer client. It means you're not rushing to make decisions. Clients can thoroughly validate information, build seller trust, and have a little bit more negotiating power if there is a justifiable reason to negotiate anything post LOI. Lastly, if deals take longer to get done in diligence, there is a little bit of a heads I win, tails you lose mentality. And it's reality, because if the business declines in performance, that's a very obvious reason for the buyer to renegotiate. Whereas if the business continues to grow and succeed and even perform better, it is much harder. It can be done, but it is much harder for the seller to justify a price increase at that point. So again, another potential benefit to the timeline extending. The obvious con to this is it takes longer to get done. It wears everybody out. It can with longer timeline means attorney bills, other due diligence and closing team bills can grow with more time. But overall, what we're finding is for off-market buyers that are working with us to find off-market sellers, it has been a little bit more of an advantage that timelines have lengthened and ultimately not really affected the overall closing rate at the end of the day. Last but not least, I'd like to announce we've continued to add to our team. We're constantly, always trying to improve, and that means improving our processes, investing in more resources in our foundation and our technology. But in September, we were blessed to add 2 new associates to the team, Tyler Tingley and Andy Garza. We're excited to have them on board. They have been with the team for some time now in a similar role. So this is just formalizing that relationship and our long-term commitment to working together. So excited to have them on board. We currently have capacity on our team to add, immediately 15 to 20 new searches and kick those off in very short order. So if your goal is to close before the end of 2025, your search should start today. The average engagement to closing timeline is 6 to 10 months. So even if you engage today, it's definitely not a sure bet. But if you want a chance at it, engage us today. Knowing that timeline to close, if you're looking to really build momentum and be somewhere in Q1 of 2026, you should also consider starting a search today. So reach out. We'd love to help you evaluate your target list. Make sure that you're doing all the right things to maximize your likelihood of success, and happy to educate you further on what a search could look like working together. Just reach out to me. My email is sam@caldergr, and that will do it for this month. We'll see you next month.